Hello, everyone. Thank you for joining us for Smart Monday's investment update for May 2020. Due to the current climate, we've decided to change up our usual investment update format. So this one's a little bit of a Q&A between Ed and I, and it does go for a little bit longer. So thank you so much for tuning in. So I'm Shannon O'Shea. I'm the Head of Member and Corporate Services for Smart Monday by Aon, and I'm joined today by Ed Tomlinson, our Head of Investments in the Pacific region. So Ed has a macroeconomic expertise. He does tap into the global expertise of Aon's investment management. So thanks so much for joining us today, Ed.
You're most welcome.
All right, so like all good things in life, there's always a disclaimer. This is our general advice warning. And what that means is it doesn't take into account your personal financial circumstances. So please be mindful that when Ed and I talk about the economy or we're talking about investments, it doesn't relate specifically to you and your account. So don't please make decisions based on what we've said. Instead, seek advice through a financial advisor, or Smart Monday members have access to the wonderful Smart Coach service. So Ed, lots of our members may know you from our previous quarterly investment updates, but there's just a lot of market challenges and changes going on, and there's a lot in the news constantly around the volatility in the market, for example. So our members have a lot of questions. So I'm going to be posing as our member group today and just asking you some of the common questions that we're getting. But firstly, we'll just debunk some of this jargon because Smart Monday does not like jargon. We like you to have access to information, and a barrier to investment is often the language that is used can be quite complicated. So Ed, you do a fantastic job of breaking this down, but just up front, I'll talk about some of the common terms that you may express in this or other investment updates just to debunk it for our members. So volatility, you will hear frequently in the newspaper and in updates, and it basically means asset prices moving by large amounts quickly. Obviously, you'll hear terms like risk and return and diversification, or time, or illiquid assets. So risk and return is the amount of risk you are prepared to take in correlation to the potential return you will receive over time. And Ed, you do a great job of explaining how understanding your time horizon, your personal individual time horizon, is key to your investment decisions. So we look forward to that. And basically, diversification and illiquid assets mean not putting all your eggs in one basket. So thanks, Ed, for answering some of these curly questions for us today.
No problem.
So I think most of us have a bit of anxiety right now. I remember, back in 2008 in the global financial crisis, a lot of superannuation members didn't even realize their account balance was invested in the share market. I think we do a little bit better today. Most members have that much information. But, it's great for you to take us through some of the common investment graphs today, Ed, and help us digest and debunk what's going on. So Ed, on the news and in your updates in the current economic climate, you use the term volatility a lot. To me, it just sounds like a grumpy person or someone who's quite volatile. Can you talk us through this graph of the Australian shares and what that volatility means?
Sure, Shannon. The COVID-19 pandemic really did create a lot of volatility, and this chart shows the sharp changes in the share prices that have happened. That's the volatility in work. At the start of the year, the Australian share market was doing pretty well and increasing in value. It's quite incredible how quickly things have changed in such a short space of time. Share markets dropped more than 30% as the lockdown took effect, and then recovered around a third of the loss by the end of April. You can see the lowest point marked where the vertical grey dotted line and the increase after that.
Okay, so do I get excited? Have we had a bounce back? Does that mean the worst is behind us now, Ed?
Well, the share market low might be behind us, but there's lots of challenges to come, and this makes me wary that another low might come despite the recovery. Share markets can be poor at identifying the exact timing of economic turning points, and as you said, Shannon, past performance is no indicator of future performance. That said, markets seem to be indicating that the worst case scenarios have been contained and investor sentiment has improved. However, no one has a crystal ball, and we just don't know what's ahead of us. Maybe there's a second outbreak. Can we find a vaccine? How fast can lost jobs be recovered, and so on. This uncertainty creates volatility and the potential that prices can go lower again. That's our medium-term view, and it's important to recognize that most super investors take a longer-term view that reflects their time to retirement, 5, 10, 20-year horizons, for example.
Okay, so I'll just repeat some of this back to you to make sure I've got it, Ed. So share markets dropped due to COVID-19 pandemic. They have had a bit of a bounce back in March and April, but we don't know if this trend will continue. That there could be another drop. Also, you mentioned investor sentiment is stronger and more positive than it was, but Australian shares seem unlikely to get back to pre-crisis levels anytime soon.
Yes, that sounds all right.
Okay, so if that's all correct, there still must be some challenges and issues in the market if we're not bouncing back to where we were. Have you got any specific examples, Ed, of where things are still a bit up and down at the moment?
Well, there are whole industries and business models which have been challenged during this pandemic. Think about sectors like travel. We really just don't know when we will be able to fly domestically or even internationally, which could be a few years away. Uh, this has a huge impact on airlines, tour operators, and hotels. And think about all the little businesses that supply that sector.
Oh, absolutely. I know, look, travel has really impacted all of us. It's taken a real hit. A lot of us Aussies are really missing our trips to Bali, and we've all got, hostess friends and air host friends that have been impacted. And certainly, the example of Virgin Australia has really hit home for a lot of us. I'm thinking about hospitality as well. Ed, being a Melbourneite, I really love to go out to restaurants and dine out a lot. We'd love to go to AFL. We're having to get our coffee takeaway. We can't sit in and get brunch. So I know a lot of my habits have changed. What else do you think's impacted, Ed?
Yeah, so I'm in New South Wales and beaches are now open, but that was something I missed for a long time. And if I think about what I do in my personal life, I love going to movies and I just haven't been able to do that for a long time. So there's been some big changes. I mentioned movies, the retail sector, anything that's around a shopping center and what have you has seen a really incredible change too. Perhaps this has brought forward a trend that we've already seen happening already. That is the shift to online retail, buying things online that you would have otherwise gone to the shopping center to purchase there.
Yeah, look, I've definitely noticed a lot of packages arriving that I don't remember purchasing, Ed, that's for sure. The world
Yeah.
has really changed.
Yeah, it has. Take office buildings, for example. Now that we know that working from home actually works, many businesses might rethink what they do with their expensive office space, perhaps reconfigure it to work better with having a lot of their staff at home all the time, or they could even downsize and reduce costs, changing their business slightly. But changes like that are really going to take some time to come through. For the moment, what we're doing is focusing on the recovery that's just starting, and I'm optimistic that ending the lockdown can see a quick and strong economic improvement, but perhaps not a full recovery just yet.
Okay, well, at least that's something to look forward to. Look, I know early May, many governments began relaxing some of their restrictions, Ed. We've seen some of the schools reopen, and each state is setting guidelines, on their own merits. What impact do you think this sort of slow recovery will have?
Yeah, the great reopening decision is a tough one, isn't it? Balancing community health alongside the economic implications, and of course, the way people think about these things is important. That the sentiment and whether they're fearful or keen to open up. Look, we just don't know yet whether the reopening will be right from a health viewpoint, but these decisions seem necessary from an economic viewpoint to restrain the already extensive damage to businesses. Beyond the short-term bounce that we think will come, it's difficult to judge how fast the economy recovers after that and what setbacks might come.
Okay, so aside from myself, the government has also been spending too. We know that the government here in Australia has been putting some things in place to protect everyone's health, like the social distancing rules, and they're closing state borders. We've seen this in other countries as well around the world, Ed, and they've also put in place some payments and what they're calling economic stimulus packages. What can you tell us about that?
Yeah, key governments around the world including Australia, have acted quite decisively, and you might say aggressively in what they've been doing. And this intervention seemed to put a stop to the share market losses in March. We won't know for a few months precisely how deep this recession has been and how effective the government stimulus packages have been to support individuals, households and businesses, but I'm optimistic that some positive news will be coming through.
Okay, so the graph on the screen shows Australian government spending per person over a number of years. And you can see that the spending that was made back during the global financial crisis and the spending that is taking place now during the COVID-19 pandemic. What else has the government been doing, Ed?
The JobKeeper payment has been the most visible part of the federal government stimulus package. Added to the federal government spend is the state packages, but also, and importantly, the RBA, so the Reserve Bank of Australia, actions to keep interest rates low and keep bond markets functioning, which is really important for investments, but also so that the government can borrow to pay for the packages that it's providing. But Australia is only part of the picture. Overseas, there have been many similar initiatives. In particular, the US government is on track to inject 1.5 trillion into its economy. Just last week, it approved another 3 trillion to be added. And this is going to come back to people via asset purchases, loans, and specifically payments to low-income voters.
Wow, they're big numbers, Ed. So the huge
Yeah.
government spending has that helped to settle this volatility down a little bit in the market?
Yeah, it has. Investors have seen governments are prepared to act to support individuals and businesses to avoid the crisis getting worse. And this backstop has improved sentiment quite a bit and settled down this volatility a little.
Hmm. Okay. So many of our members have been asking us and the smart coaches and the smart partners on site what all this means for their personal superannuation account. There is a lot of fear in the market, and people, are really worried about their balances. So we've seen strong growth and returns for a number of years with Smart Monday, but as we've just discussed, markets are moving quite a lot, and we've seen some drops. So how's Smart Monday doing, Ed?
Yeah, members whose portfolios included some growth assets have enjoyed many years of attractive returns. This chart shows the returns over 3 years to certain points of time of our flagship growth options compared to the super ratings median. That's an industry body that measures the performance of a lot of super funds. And this is an indicator of how the industry is going and how Smart Monday is doing compared to that. Look, compared to last year's results, so these are the big bars, the March 2020 result is much lower for all super funds as it includes the worst of the COVID-19 crisis. But it's still positive, indicating that despite the turmoil in March, member returns remain positive over the long term. If I look inside what happened in the March quarter, the asset classes that benefited members the most for many years, mainly shares, had the worst returns. But shares have also had the strongest recovery. So I'm optimistic over the next quarter, which isn't shown in the chart, that the results will start to look okay as well.
Oh, okay. So I hear you use the term alternative investments, Ed, and you've mentioned in previous investment updates that some super funds have more alternative assets than Smart Monday. What does this mean for our members in particular?
Alternative investments are things that can't be easily categorized as a listed share, a bond, or cash. A few of these assets are illiquid. That is, you can't get out of them or sell them very easily at times like this. It also means that they're difficult to value fairly and quickly. What typically happens is that their prices adjust over a few months or even years. Probably the easiest alternative investment to think of is direct investment property, a shopping center, an office block, that sort of thing. We expect that COVID-19 is likely to be negative for property. And you can see that this in the fall of the value of listed property trusts. So this is property which you can buy via the Australian Stock Exchange. But the revaluations of direct property can take many months to complete, and we haven't really seen those revalue in a big way till now. Smart Monday has lower alternative investments than most managers, which means that other funds may show the decline in prices a little bit later than we have. So partly for this reason, Smart Monday's returns compared to other super funds in the first quarter were weaker. But after the next quarter end, which is not shown in the chart, and as markets improve, we anticipate our returns can be stronger as we head towards June and beyond that. You'll be able to see those results in our next quarterly update or by checking on the website around mid-July, I would suggest.
Okay, so there's definitely a lot to consider and a lot going on. We've talked about markets, volatility, government spending, industries that have changed rapidly, and also about different types of investments, Ed. So we've crammed a lot into this space. Some of our members, a lot of them are just like, there's so much information. Can you give me one key point or some really clear guidance around what we should be thinking at this time? Is there one key takeaway that you think members should pay attention to and focus on?
Absolutely. I think the main thing we need to do is keep in mind that super is a long-term investment. And this is very much my approach and the way that we run the investment strategies within Smart Monday. Focus on the long term, looking past the short term. Yet it's understandable to feel worried about market losses or feel anxious about your super, especially when the short term results are negative like they are right now. And losses do happen pretty regularly, as the chart indicates. You can see lots of numbers and events here. They're all things that have happened through time, but markets have always come up again. Now, once you take a long-term viewpoint, the best thing is to check that the amount of growth assets that you're invested in is consistent with your time to retirement. I'd suggest if you're in doubt, contact an advisor or one of our smart coaches are very well placed to help you sort this out with you.
Yeah, thanks, Ed. And you've introduced this slide to us in the past, and it just really helps with that long-term view. And the overall trend is up over the long term, and I think that gives us a lot of comfort. And I'll flick to those smart coach details shortly. Ed, can you give us some insights into what Smart Monday's doing to look after members' assets at this time? What are you doing as an investment manager?
Yeah, sure. We've been making adjustments to the portfolios throughout the crisis, but we're always making sure that we're sticking with our long-term plan for each of the options, making sure that what we believe is going to happen over the long term is what we're invested for. Uh, to break it down a little bit, on the way down into the crisis, we use diversification mainly to limit any losses. But once markets had stabilized, and mainly in April, we started to cautiously add back in growth assets. We also took advantage of the volatility to implement a new international share strategy, which we think will benefit from the trend towards a low carbon global economy. Now, whether you believe in climate change or not, the financial risks are real. And this change to the portfolio offers more protection and perhaps some additional return for members.
That's really good. I know you can't predict what will happen next, Ed, but we do get this question quite a lot. And I know you're a macroeconomic expert, not a fortune teller, but we just get asked this so many times. Can you give us a sense of what's going to happen in the future? What can we expect next?
Yeah, you're right, Shannon. I don't know what's going to happen in the short term, and this situation really is unprecedented. So I think we should all use a lot of caution when we're investing our super. Look, there is a lot of uncertainty surrounding any reopening, and it seems likely that we might see some false starts and maybe maybe some further falls in the share market. We'll have to wait and see. But at some point, I expect we will move on to a new normal way of doing business and living our lives. I expect to see businesses continuing to innovate and find new ways to create value, and this can start to push markets up again. I think it's really exciting time to be in at the moment, as this innovation could come really, really quickly, and that could be fantastic to watch and experience over the next little while.
Yeah, that's right. It's really interesting, isn't it, Ed? Especially that innovation piece in business. So thank you so much, Ed. That was absolutely as insightful as ever. Again, I'll just wrap up by letting all of those who tuned in today, thank you so much. Please, take a couple of actions. Don't just take this information and not apply it out there in the real world. Chat to a smart coach if you've got questions around your personal account balance. Log in and just have a look at some past statements and your current balance today. But certainly our smart coaches are there and waiting for you either via phone, live chat or email. Otherwise, speak to your personal financial advisor. And again, thank you so much, Ed, for joining us today.